Today, we're going to start our deep dive into
banking economics. And if that doesn't scare you, nothing will.
I'm just kidding. This video is designed that even if you know nothing about banks or economics, you'll still get this. Because really, the more common sense you have, the more this makes sense. I just heard a few of your spouses saying, oh, my husband or my wife, they have no hope right now. That's what my wife would say about me. No, you'll still get this, I promise you. We'll make this as simple and as real life as possible. Now, if you've ever looked at your bank statements, it's pretty obvious. Your savings accounts are making you like 0.nothing%. They're making you like zero money, aren't they? So why are interest rates so low right now on savings accounts? Stay until the end to learn how you can supercharge your savings accounts, because it's gonna be juicy, it's gonna be good, and you're gonna make a heck of a lot more than 0.nothing%. So stick around. First point I wanna make are, really, you gotta understand how interest rates are really set, right? You gotta understand how the banks really work. Banks love to make money off of you, don't they? Now, when you put money with a bank, do they just let it sit there and collect dust? Do they just, after years and years, you come in for it? Is it kind of like that where they pull out this big tray of, money, of bills, and they go, and it's like, you're in an Egyptian tomb, and it's like all this dust blows off of it, and you're like, here's your savings after 60 years. We added $2 on top of it. You're welcome, right? Is that what they do? No, of course not. They're using your money, right? All right, so here's the 5 rules of the bank. And if you understand this, everything will make more sense. Number 1, how much of your money does the bank want? All of it. Number 2, how often do they want you putting your money in? All the time. In fact, they want you to put it in with every paycheck. They'll even make it easy for you. You'll just automatically come out of your paychecks every month, right? Or every paycheck. They love it when you put it in all the time. Number 3, how long do they want it in there for? Forever. They never want you to come back in for that money. In fact, the longer you keep it there, the more they say they'll pay you, won't they? And then number 4, when you do want the money, how much do they want you to take out? Well, as little as possible, right? Because hey, you don't want to take out all that money because you can lose that compounding interest. By the way, compounding interest is the 8th wonder of the world, like Einstein said. By the way, Einstein never said it. The only time I ever found that quote is on financial advisors' websites and network marketing companies. That's it. Einstein never said compound interest is the 8th wonder of the world, but boy, do they love to quote it, don't they? So that's number 4. They want you to take as little out as possible so you can keep it compounding for as long as possible. And then number 5, how much risk does the bank want to take? Nada. Nothing. They'd love to pass it on to you. That's why if you ever put your money with Fidelity or some other company like Merrill Lynch, they're not investing their own money, are they? No. Do not. There is no try. So yeah, you ever notice if you put your money with Fidelity or Merrill Lynch or whatever company, notice they never invest their own money, do they? No. They take your money and they gamble it in the stock markets. They don't put their money in the stock markets because they know that's ridiculous. What kind of idiot would do that? Oh, everybody that puts money with them. That's who does it, right? They let you take all the risk while they take none of it. They get their guaranteed little fees every time while you get none. Those are the 5 rules of the bank, right? They want your money as much of it as possible, for as often as possible, for as long as possible, give you as little back as possible, and take as little risk as possible. Well, what do they tell you to do with the money? They tell you to put it as much as possible, because hey, the more the merrier. Do it as often as possible because you should make it a habit. You should habitually do it where you just turn your brain off and you just put it in like a zombie. You just put it in and it goes in and you're like, argh. You just do it. And then you do it forever because that compound interest is the 8th wonder of the world, right? And then the 4th thing is you don't want to take too much out. You ever heard them say you want to live on less than the interest only? That's why they have the 3% rule, so you never run out of money. And neither do they, because they keep making money on your money as they charge you more fees. And then the 5th one is they want you to take those high risks, because high risks create high returns. Wrong, high risks do not create high returns. By the way, if you get nothing else out of this, if you understand these rules, everything else will make sense. You'll understand why banks do what they do. You'll understand why. If you look around, that your savings account, they pay you nothing. Why? Because you can get to it quickly. But if you put into a 5-year CD, they'll pay you more, won't they? Because they want you to keep it locked up. Because if you put that money into a 5-year CD, what do they do with your money? They're taking that money and they're loaning it out on let's say a 5-year car loan, right? 5-year car loan, they'll charge you 5% for lending you back your own money or lending somebody else that money. So they might pay you 2% a year while they make 5%. And just so you know, that's not a 3% rate of return. That's actually over 100% rate of return, because that 2% to double, they only have to make 4. But no, they make 5. Oh, and better yet, just so you know, they actually leverage more money than what you give them. For every dollar you put in your savings account, they can go and lend out $10. So not only are they making from your little 2% they paid you on that CD, and they're not making 5, they're actually making 50%. So that 2%, they make 50%. Huge. Now, another reason why you're getting paid so low is because of current events. The interest rates have been low because the Feds lowered it. Just so you know, the Federal Reserve, or one, they're not federal, they're not government officials, and then two, they don't really have reserves. They're just bankers. They're basically the bankers in charge of all the banks. They're the ones that are trying to determine and set interest rates, and really they just follow whatever they feel like doing. Well, lately we start to see interest rates come up a little bit. This is why you might see your 0.05% savings account become a 0.1% savings account. Yay! We doubled our money. Although that's double of nothing, right? It's like double of nothing is still nothing. So that's what's going on. So yeah, you're seeing it go up because they're raising interest rates, which of course allows the banks to then charge you more on the loans, so they still make their money. You might go from 0.05 to 0.1%. Well, guess what? They went from 3% car loans, they're going up to 4, maybe 5% car loans. They're always making more. And that's the key point, is that the house always wins. Just like in Vegas, the house always wins, don't they? The banks have set up these rules so that they always win. They want to take your money. They want you to lock it up, forget about it, don't do anything with it, and just let it sit there while they're making money off of it. You're taught to accumulate money. They're taught, and they use their money, your money really, to accelerate money. You accumulate while they accelerate. And that is the key. If you want to start really getting your money to work harder for you, you need to become like the bank. You need to start taking those rules, turning the tables around on them, where you start getting in charge. And that requires you thinking about money completely differently. That means you may not even care if you get a loan or not. Because if you can get a low interest rate loan from the bank, you can make more money with it. The question is, do you know how to make more money with it? If not, then you might be stuck playing by the bank's rules. And guess what? You are guaranteed to lose. How do I know? Because as a financial advisor for several years, even when I met with clients that had worked with financial advisors decades prior, guess what? I've seen the future. I've seen your future potentially. If you follow these rules that the bank has put in place for you, not turning the tables on them, but you go and you give in to the traditional rules that financial advisors and banks are teaching you right now, you will lose, because people do not become financially free doing these kind of things. So how do you reverse it? How do you turn the tables? This is where you want to become the bank yourself. There's a strategy out there called infinite banking. I like to refer to our strategy as max ROI infinite banking, which is different than the typical infinite banking you might look up here on these videos, right? Infinite banking is just this. You get a whole life insurance policy. This is different than term insurance. Term insurance is really just death insurance. You can only get paid when you die. Whole life insurance has that death benefit, but it also has this tax-free savings account there. If it's done right, it's really a tax-free supercharged savings account. Because what can you do with it? Well, one, not only do you not get taxed on this money at all, it's like a Roth IRA, but you don't have all these stupid rules of 59 and a half. You have to wait till you're old and things like that. You can actually retire early with this. But two, the cool thing with this is it's guaranteed, and it makes at least a 4 or 5% rate of return, even after you've paid for the insurance cost. Now that only happens if it's designed right, and there's other videos we talk about on this. We even have a playlist, actually, you should check out on infinite banking to learn more about this. But just to give you the surface level on this, right? The reason it works is this, is that yes, you have this tax-free savings account. Now you might say, well, 4 or 5%, that's better than the bank by far, and I don't get taxed on it, because with the bank, you earn 0.nothing%, and then you get taxed on 0.nothing% when you take it to your accountant at the end of the year. The infinite banking, you never pay taxes on it. However, that's not the real magic. The real magic is when you become like the bank with it. This is where you have the money here in the savings account, but you can actually get a line of credit against it. You can get a bank loan against this money. The money is sitting here as collateral, right? It's sitting there, but because banks and insurance companies know it's guaranteed to never lose money. In fact, most of the guarantees are at least 3% returns. Even if they don't pay a dividend, they still guarantee 3%. Well, guess what? Banks and insurance companies love to lend against it. Only certain ones, though. There's certain banks. Not every bank does this because they don't always specialize in this. But they will give you a low interest loan against this money. So while you're earning like maybe 5, 6% over here, they might be charging you 4% over here. So do the math. Think about this. If you're earning, say, 5%, but you pay 4% on this loan, guess what? You make 1% by using their money. Just like when they do it to you, right? If you're making 4% of your savings account and they loan at 5%, they win, don't they? Well, why not just do it in reverse? You earn 5% and then you only pay them 4%. And guess what? Now you get to leverage that. And here's the key. You invest it in other things. You can go do whatever you want with that money. I love to invest in things that are certain and predictable and give me double-digit 10+% returns, like real estate investing. Not your normal real estate investing that your neighbor tells you to do. Now you want to find the right mentors, the right people that teach you how to create passive income with it, where you're getting double-digit returns on those kind of investments. So what happens if I make 10% of that real estate property, add 1 or 2% or more on top of it, and now I'm making 11, 12 or more percent by using the same strategy I would have done using a savings account, but now I get to use the rules of the bank in my favor so that I can make more money too. And you can do the same thing. So be sure, like I just said, go check out our playlist, Infinite Banking. There's lots of good education there. And also, watch the next video here. What are the different types of savings accounts? Go check that out right now.